A big hello and a very warm welcome to Brand Equity with me, Sonali Krishna. Social distancing, lockdowns, and other restrictions unleashed by the COVID-19 pandemic saw people canceling travel plans, avoiding shopping trips, and of course, growing more concerned about their finances, which led to a natural decline in the number of credit card transactions. My credit card bill, for instance, has seen a serious decline simply because of the lack of spending opportunities. I'm sure yours has too. The payment processing industry has been significantly impacted by the recession that was set off by the pandemic, just like any other sector. Now, American Express or Amex has always been seen as a card issuer to the rich and famous and a card that is associated with the elite of society. I am joined today by the Amex India CEO, Manoj Adlakha, to discuss several things from how the pandemic has impacted the industry at large, the company in particular, Amex's 2021 plans, and of course, what the fintech industry has in store for us. Well, on that note, thank you so much, Manoj, for joining us right here on ET Now. Truly a pleasure.
Thank you for having me, Sonali.
Manoj, I'd like to start, with the macro picture and then zoom in and talk about, Amex in particular. It's obviously been a difficult time across the board, across sectors, and, the payment processing industry is obviously no exception. But give me a sense of how credit cards have fared during this time. I'm asking this question particularly, of course, because of the obvious reasons that we know that travels, spending, generally concern over one's security of finance, all of that, yes, understood. But we've also seen, a big spurt in, e-commerce because most of us are sitting at home and shopping. Having said that, I want to delve deeper and not just do the basic. Because of the spurt of, digital wallets and the adoption of that, are people spending on credit cards because of this, very different animal that India is seeing now and the adoption of that?
We have, give or take, about a $3 trillion GDP. It shrunk by 7% in 2020 because of COVID. Otherwise, it was, growing anywhere between 5 to 7% prior to that. When you look at the overall GDP of, $2.8 trillion is really what it was for 2020. 60% of the GDP is private consumption expenditure. So that's give or take about $1.5 trillion. And interestingly, when you look at the entire digital payments in India were only at, they added up to about $150 billion. So when you look at the percentage of digital payments as, where that's the numerator and the denominator is private consumption, that's 10 to 12%. So India continues to be predominantly a cash society. So there is a lot of headroom for growth. COVID, yes, has set it back. The tipping point in India was really demonetization, which happened in 2016, and you alluded to digital wallets. That's when digital wallets came into being. At that point in time, the utilization on digitization was very little. Post that, as we sit in 2019, there are really three forms of digital payments. There is actually four. There is credit cards, there is debit cards, there is digital wallets, so the Paytms and MobiQuicks of the world, and the last is UPI or Unified Payment Interface. Yeah. So in 2020, which was a little bit of a watershed year where the numbers came down because of COVID. When you look at 2019, we had at an industry level $100 billion of payments that happened in credit cards. And that came out of 50 million credit cards. So 50 million credit cards in the industry contributed to $100 billion of billings. There were 900 million debit cards that contributed to another $100 billion of billings, right? I'm talking about 2019. And then there was about $200 to $250 billion of UPI. Digital wallets had come down dramatically because, UPI ate into that share. When we and that was growing, each one of these was growing at about 20%. When we get into 2020, which was the full year 2020, both credit and debit cards actually came down by 10%. So yes, you're absolutely right. There was, because travel came to a standstill. People, like you mentioned, if the avenues to use your card could have been a mall, could have been a theater. It was a lockdown. People could not go anywhere. But there was a reindexation where people instead of, utilizing the cards, outside, they started to do it online. So that was a paradigm change that we saw in the industry. As a matter of fact, 60% of all the spend right now in the industry is happening online.
Okay, I mean, I'm very grateful for breaking this down and giving me that kind of clarity and my viewers. But let's just break this down a little further for my understanding and my viewers. Let's look at the pie as it stands today, right? And the four buckets that you put, payments into. What would be the pecking order today between credit, debit, digital payments, and UPIs?
What's really on fire is UPI. It is on fire. UPI in 2021, and UPI, for the benefit of your viewers, I'm assuming almost all of them must be utilizing UPI. It stands for Unified Payment Interface. There are about 150 banks, that are tied up into the network. And UPI has two end use, or use cases. One is what is called P2P. So if I had to transfer some money to Sonali, all I need is a telephone number, and that's it. It's a real-time transfer. There you go. Second is, so that's called P2P, person to person. Second is P2M, which is person to merchant. So I could go into a merchant and still do a transaction, and all I need is a QR code, and the transaction goes through. So approximate value that we believe which will happen in UPI in 2021 would be in the range of about $500 billion. So that's about $40 to $50 billion a month. $500 billion would be the full year transactions value that will happen in 2021, of which 75% would be P2P, 25 to 30% would be P2M. So that's UPI for you. When you look at credit cards had a decline last year. Like I said, it was $100 billion in 2019, probably finished at about 85 to 90 billion in 2020. We expect that to increase by about 25 to 30% because there would be a grow over opportunity in 21. So in credit cards, it will be about $120 billion of credit card at an industry level. I think while we are on credit cards, I do want to share with the audience that pre-COVID, there were 1.5 million new credit cards being added on in the industry every month. That's not a small number. So 1.5 million credit cards, and now post-COVID, that number has come back to 1 million new credit cards on a monthly basis. So there are people who are still, and we have moved from 50 million credit cards to 60 million, but in a country as big as India, it's still 60 million is very small. Now coming to debit cards, when you look at debit cards, that number, we have about 900 million debit cards, which account for $100 billion, dollars, like I shared earlier, which is what is called point of sale purchases. Debit card in India still is predominantly used as an ATM withdrawal, mechanism. That's really the primary use of debit cards. So debit is not increasing at a very rapid clip. And the last thing is wallets. Wallets has been static. Wallets has really been static because, the use case for wallets has really been taken over by UPI.
What I've understood from you is it's UPI followed by credit, debit, and then, digital wallets. So, zooming into just the credit card space, would you say that, it's shrinking?
No,
in terms
not
of
at
value?
all. It's not shrinking at all. Like I said, last year, as in 2020 gone by, at an industry level was $90 billion. This year, the increase would be about 25%. So we would finish at about $120 odd billion. And, so very much. 1 year was an odd year because everything came to a standstill. But this year, at an industry level, there would be about a 25% increase.
Okay. Now let me zoom into India and talk about, American Express's presence, market share vis-a-vis, key competition in India. How do you think, if you had to critique yourself, how do you think it stands?
Firstly, we are very proud of the fact that this year, 2021, we complete 100 years of presence in American Express in India. We've been around. We are a global company which has been around. Yeah, that's correct. We've been a global company which has been around for 170 years. And in India, we started off with the first travel office in 1921. So in 2021 is 100 years, and we are very, very, very delighted with the way the growth has happened. Within the 100 years, there are various products and services that we have offered. Specifically, when you look at the credit cards, we got into the credit card business only in 1993, which is 27 or 28 years ago. Before that, we were really what's called a destination business. So, customers from the US, UK, other parts of the world would come here and they could use their cards. But locally issued credit cards started in 1993. We did have travel, we did have traveler's checks, we had a bank business, all of that, right? But our focus now is really on credit cards. And within credit cards, what we've done is over the last 25 years or so, we have expanded the suite of products. So we have, 7 different products catering to different TGs, different target groups, depending on their needs. The other thing which we have done over here is that we have increased. We started off with 4 cities. We were issuing cards in 4 cities. And as of today, we issue cards in more than 20 cities. So we believe, that we are taking it in a very measured way, but wherever the audience is there for us, we will ensure that, we'll address that audience.
Are you a product for all? Are you for the mass market, or are you a premium product?
The point I made, if there is somebody, right, in the product that is at 500 rupees, we are looking at anyone who would be earning 450,000 rupees and above per year. That's what, 40,000 rupees per month. That person can qualify for that product. So that's really, I don't know whether we want to call it a pre-affluent or what, but we have the right product for the right segments, and we have a multitude of products.
How would you say American Express stacks up against the rest?
We have really moved the needle from where we were. If we were doing X number of cards, a year, COVID, like I said, let's keep COVID aside.
Sure.
If you were doing X number of cards a year, 3 years ago, in 2019, that X became 3X, right? So,
can you give me specifics, or you?
We can share the numbers.
Okay. There's another concern, amongst people who critique credit cards, right? And especially talking of the Indian market, this might not be a concern globally, but definitely in India, is that a lot of merchants do not accept American Express. And the common complaint is that because you charge a lot higher than your competition.
If somebody were to have asked me this question 5 years ago, I would have straight away said, absolutely, right? Absolutely, I would have said that, But I shared a number with you, and I think that's a very important statistic. 5 years ago, we were around 100,000 merchants. That number has moved to 1.3 million merchants. So that's 13x growth over the last 5 years. Now, that is huge. The second is we put so much of value into the products, and we do charge what is called a premium discount rate or a premium commission rate, which is, by the way, over a period of time, the differentiation between what we charge and some of our competitors charge has dramatically reduced. So there is a little bit of a difference between what we charge, and we put whatever those are premium economics, and we put that premium economics back into the value proposition so that we get, and that is the cycle that we operate in. So I would, at the end of the day, when you talk about rewards, when you talk about service, right, we are ensuring that is world-class, best-in-class service, best-in-class rewards. And if for that, a little more premium economics are, premium discount rate is charged from the merchants, which again, I want to make a point over here, has come down dramatically, because otherwise we would not have had 1.3 million merchants on our books.
I'm just asking you to think out loud. Do you think you need to be more competitive, given the fact that, you're looking to be more aggressive, and you have, healthy rivals in MasterCard and Visa? Are you looking to, at some level, be more aggressive and more competitive with your merchants going forward, so that the acceptance of the card is slightly more universal?
So, the way I look at it, for me, the biggest competitor is cash, honestly. There is so much of headroom. Go back to what I shared at the start of this interaction. Right. There is 90% of the private consumption expenditure in India is cash. 10% is...
Manoj, I want to stop you there. And I want to stop you there because the statement you made, you said, I think my primary competition is cash, right? But for people who are still spending on cash, right, spending with cash rather, to make the transition from cash to American Express is a tall ask, don't you think?
Sonali, when I look at this, like I shared, there is a product out there where the entry level is 450,000 rupees per annum, which is less than 40,000 rupees. I think we also have underwriting. It's unsecured lending we are doing at the end of the day. But, somebody who's earning 35,000 rupees a month in India, I think we've defined that to be, and we have the right product for them. We did not have that product for this segment till, about 1.5, 2 years ago. We got this product. It has had immense, take up. So we will continue working on products, and as and when, there is a need in the market, we will ensure that that need is met. But we are here to increase scale and relevance. We are absolutely clear about that.
Sure. And talking about credit cards in general, today with UPIs, popular UPIs, which are so convenient, like GPay and Paytm and WhatsApp Pay now on the annual. How is the industry, the credit card industry, which is looking to penetrate and get more users, on board, able to communicate to this large target group, say, the benefits of having a credit card?
So very simple. At the end of the day, in case of a UPI, I don't think you can compare the two. UPI does not give you what happens in UPI. If I was to do a UPI, straight away there's a direct, transfer from my bank account. In case of a credit card, I can do one of the two things. One, if I decide to, as a credit card holder, even if I decide to pay in full, I still get 45 days on an average of free credit.
Sure,
on the other hand, if I decide to pay in parts, then I can keep paying for the next 2 years. And of course, I pay a certain amount of interest rate. So that is the fundamental use case of a credit card, which is different than a UPI or anything else.
Everybody's talking about 2020 being the pivot year for several things in life, and life possibly would never be back to normal again in terms of consumer habits. Are you in agreement with that bombastic statement that people have made?
On the card business level, I see a pivot, I see a shift, I see two things which have already become pronounced over the last 6 months. People have, because we have so much of data, we are unique again in that we are a closed loop network. American Express is. We issue cards, we acquire merchants, and we process transactions. So nobody else does that, right? So we own the entire ecosystem. So we have a very good line of sight into where a customer is spending, right? And how much are they spending, unlike our competitors. And what we have seen is the amount of travel and the amount of spending that is happening onto 75% of our spend is online now. 75%. That is huge. The second is whatever travel had come down to 3%. Earlier it used to be 40%, 35 to 40% of our spend pre-COVID. It then came down to 3% naturally because everything travel came to a standstill. It's back to 25%. Now that 25% of spend, 95% of that 25% is happening in hitherto destinations where people within India had never gone to earlier. They're discovering India, the new India. So that is amazing. So what we are trying to do is to, work with, some place in Himachal, and, it's no longer, of course, the Goas and all continue to be popular, but so this is, in a way, it's good. So the Discover India, remember the whole, branding around that. So that is also getting a life of its own. There's so much, and India is so rich in terms of culture and heritage. So people are benefiting. I think that would be another marked shift. And the last piece I would say is that, you did speak about, spending. I think maybe COVID has taught us that, there are a lot of uncertainties in life. Let's go out there and make the most of it. I have a feeling that's also started to happen.
Okay. So you're saying, you live life only once, so go out there and live it all.
Yeah.
Okay. So basically you do feel that things have changed forever, but, my question was that will spending and, explorations post this COVID chapter going away from our lives go back to normal, or have we really had a reset for life?
We have had a reset, but like I said, even in this year, going back to those numbers that I mentioned, we will be back, at a 25% increase, which would be 15% higher than 2019. And then from there on, we'll be back to our 20-25% industry level increase. And, because there is so much of opportunity and headroom in India. So I don't see that going away.
Yeah, and you do see consumer spending going back to normal, right? 2022, 21.
Absolutely. I do.
Right, once we have this fear psychosis out.
Fear psychosis is one thing. I'll give you an example. We've, there have been there are, I don't know what's the right word for it, but the pangs of guilt pangs to go out there and shop. So online, people have just gone berserk in terms of the amount of spending that is going on.
What are you looking to achieve as the leader of Amex India in 2021? So big challenges and milestones that you'd like to achieve and overcome.
So if there was one thing that we would want to do in 2021 would be to build scale and relevance even more. So you've been speaking about, so that next time I have an interview, this thing about classification of American Express not being, what it is, because it is not. And, so we would want to build scale. We would want to build even more relevance. We have been on that path. We would want to, fast, and we would want to accelerate that even more. We would want to get into a few big partnerships, because a lot of this we may not be able to do on our own. It could be with a fintech player. It could be with some other players, in the industry. And we are in advanced discussions with some players. So for me, if, we were to have this conversation 6 months down the line, it would be, how have we built scale and relevance in a significant and more importantly, profitable manner in India in 2021?
I'd be very curious to understand from you in terms of ARPU, the Indian market versus, let's say, other markets. Ours would be, frighteningly low, right?
So revenue per user is going to be lower. But again, when you look at the card industry, our revenue per user, I would take it into two, I would break your question into two parts. One is it's high for American Express for the simple reason, the amount of spend that on an average an American Express customer does is 3 to 4 times what happens in the industry. Within that, our focus on premium customers. I'm not saying for a moment we only focus on premium, but the focus on premium customers, a premium customer does 10x of the average. So suddenly what you're doing is there's a multiplier effect that is kicking in. And then look at the fee. That's on the billings, right? And billings also, you also mentioned, the revenue that we earn on the, from the merchants. And then look at the fee, because if you are charging fee, each one of these customers on the premium side is paying the fee they are. So the ARPU effectively becomes higher, and then what we want to do at the lower end is to build more and more scale with, some of the cards that we are now focused on the millennials. So I think we will make sure that as we, do what we want to do from a strategy viewpoint, build scale relevance, but build it in a very profitable manner.
Okay. On that note, more power to you and American Express. Thank you very much for spending time and explaining, the industry dynamics and, of course, Amex in particular. Have a fantastic 2021.
You too. Thank you. Bye-bye.